Hi, this is Jack Crooks from Money and Markets TV. Last week, the Bank of England opened up the floodgates, adding $110 billion worth of new stimulus money to the markets. Investors reacted by driving the value of the British pound sharply lower. But if you've been paying attention to the UK economy, like I have, you weren't surprised by the central bank's move. That's because the British economy has been rolling over towards recession for quite some time. Gross domestic product contracted in the fourth quarter last year, and there's been little to no growth since then. In the second quarter, GDP expanded just 0.1%. But I believe the new round of quantitative easing will have about as much impact on the real economy of the UK as QE1 and QE2 did on the US real economy. Not much. The country will continue to spiral into recession, and the British pound will take a beating. This is nothing new. Every time investors lose their appetite for risk, the pound feels the heat, along with most equities and commodities. We can see this clearly by comparing the British pound currency to the S&P 500. I believe that once this oversold rally in the US stock market runs its course, the pound will plunge along with the S&P. The International Monetary Fund is worried about another global downturn as well, and it's advising governments all over the world, including London, to loosen their monetary policies and put their fiscal tightening programs on hold. The IMF is acting like stimulus measures were a proven solution to economic crisis, but we know that's not the case. However, additional stimulus will provide liquidity to the markets and likely give the sentiment a boost, at least until G20 meeting in early November. At that point, investors will realize that world leaders really don't have any solutions. That's why I believe the longer-term trend in risk assets, including the British pound, is lower. In my most probable scenario, the currency will see a corrective bounce, but the weak fundamentals of the UK and the global economy will drag it lower over the next couple of years. In my worst-case scenario, we see another financial crisis similar to the credit crunch of 2008. In this case, countries deleverage much as private companies did 3 years ago, and pound sterling gets crushed along with most asset classes. So if that happens, what can investors do to protect themselves? Well, think about it. The process of deleveraging means dollar credit is removed along with dollar supply. Historically, during similar times of deleveraging, big money has flowed into the deepest capital markets in the world, here in the US. I believe this will happen again, creating a new bull market for the dollar. I'm Jack Crooks for Money and Markets TV. Thanks for watching.